In 2023, thematic ETFs had more than $400 billion in assets worldwide.
What?
Okay, I admit that this was a bit demoralizing. So let's get started. Most people completely misunderstand thematic funds, and this costs them low share results or referrals to the wrong funds. By the end of this video, you will understand how thematic funds really work, the critical elements of millions of dollars that most people overlook, and how the knowledge of thematic funds works. Before I explain how thematic funds work, you need to understand something that most financial experts never mention. Contrary to what you may have heard, thematic funds are fact-based funds that predict tomorrow and act accordingly. This is very important because artificial intelligence and various innovations have taken off in recent years. In essence, thematic funds consist of basic components. 1. What is a thematic fund? How does it operate? Who invests in it? And how does it predict the next growth wave? 2. The tactics employed by investors and fund managers in these semiconductors, enterprise software, and artificial intelligences. 3. The hidden dangers of theme funds. The unknown truths are that individual investors who are following the major trend often overlook a lot of concerns. 4th, practical guides and information for choosing the ideal theme. With dozens of themes emerging, from space exploration to digital health, choosing the right thematic fund can feel like trying to predict the future. But successful investors don't guess, they evaluate. Today we're going to examine each component, explain how they work together, and show the impact that most people completely miss on the world of frontier technology. Let's start with the pioneers of thematic funds and how they actually work. One of the largest, the ARK Innovation Fund, has raised $40 billion on its own. But these funds don't invest in sectors or individual performance. Themes differ from the sectors in which other fund companies invest in that they have a specific idea and tendency. Shaped around a trend or expectation, these themes require analysis and investment experience. Themes can cover more than one sector. They can address ideas such as digital transformation, green energy, sustainable and innovative technology, artificial intelligence, and finally the rise of e-commerce. ARK Innovation Company works in exactly these areas. They invest in themes like artificial intelligence, robotics, or climate technology. And behind each one, billions of dollars are quietly moving toward what people think the future looks like. Thematic investments have expanded faster than most traditional asset classes over the last decade. Morningstar data cited by UBS indicates that by the beginning of 2022, assets under management of thematic funds exceeded $800 billion. But this level has not been sustained. But don't worry, companies like OpenAI have actually increased the potential of these funds. Here are the fund companies focused on artificial intelligence on the screen. You can examine them in detail by pausing the screen. Artificial intelligence seems to be the future of this business, and many investors and billionaires are talking about its importance a lot on social media. Thematic funds are intended to track long-term structural change rather than transient market noise, in contrast to sector-based funds. Themes like artificial intelligence, the energy transition, or aging populations don't go away during market volatility. Rather, they pick up speed. The objective is to keep investing in the forces that are transforming cycles, not to forecast everyone. Thematic investing is a strategy, not a belief in seasonality. 1. The inclusive nature of thematic funds. Thematic funds are accessible to regular investors through mutual funds and exchange-traded funds. No millionaire status is required, unlike hedge funds, which are for accredited investors. By complying with regulated standards and regularly disclosing their holdings, they give you full transparency on where your money is going. 2. One important idea is transparency. These funds don't have any hidden agendas. They are transparent about their selection criteria, themes, and methods. 3. The foundation of thematic investment is long-term conviction rather than intricacy. Just focused exposure to megatrends like longevity, green energy, and artificial intelligence. No leverage, no short selling. Investing in change, not market prediction, is the aim. To help you grasp how thematic investing operates, allow me to provide a little example. Suppose you think the next 10 years will be dominated by clean energy. A theme fund invests in a collection of solar panel manufacturers, battery technology businesses, and grid infrastructure suppliers rather than purchasing a single solar company. All of these will gain as the use of renewable energy grows. Grids grow, more batteries are stored, and more panels are sold. Because the theme itself speeds up the business at scale, your investment increases along with it, making you lucrative. Faith in the context of theme investing refers to putting your money in line with revolutionary worldwide movements, such as biotechnology, climate technology, or artificial intelligence, and sticking with it in the face of market turbulence. Timing isn't everything. Therefore, if a topic does poorly in the near term, it doesn't indicate the trend is dead. I appreciate how seasoned thematic managers approach faith. If the facts confirms the trend, keep going. If not, reconsider and don't freak out. Stocks that follow long-term trends are the main investments made by thematic funds. Some use derivatives like options or futures for hedging or tactical adjustments, while their core strategies focus on direct exposure to transformative themes like AI, clean energy, or healthcare innovation. 4. Fees. The cost structures of thematic funds are quite simple because they are intended to be transparent and accessible. A typical thematic exchange-traded fund has no performance fees and charges between 0.3% and 0.75% per annum. This means you are paying for exposure to innovation rather than the promise of alpha. For example, consider the ARK Innovation ETF. Regardless of its annual performance, it has an expense ratio of 0.75% and manages more than $6 billion. Now, you might be wondering, if thematic funds are based on big, long-term trends and open to everyone, then why do so many people still treat them like short-term speculation? The answer reveals something fascinating. It's not just about the trend. It's about how investors and fund managers turn that trend into a strategy. And that leads directly to our second component, strategies used by investors and fund managers. Let's now move on to thematic investing strategies. That's the essence of thematic investing. You don't chase trends, you position for transformation. Consider AI now. The entire stack, including semiconductors, cloud computing, enterprise software, and industry-specific AI, might be exposed by a thematic fund. Even if one component slows down, for example, chip sales decline, the whole trend continues to improve because the ecosystem moves together when the transition is genuine. AI-themed funds aren't chasing hype. They're allocating capital to the infrastructure of the next industrial revolution. These funds make investments throughout the AI value chain, from enterprise platforms that incorporate machine learning into actual industries to high-performance chip makers like NVIDIA. In 2023, the Global X Artificial Intelligence and Technology ETF, AIQ, returned 38%, driven by its early exposure to companies enabling generative AI. And it's not just the fund that's gaining. In just 12 months, Jensen Huang, the CEO of NVIDIA, whose business became the mainstay of AI investing, had his personal net worth increase by more than $40 billion due to the surge in demand for AI computing. That's what thematic investing does. It doesn't follow the news. It invests in what's next. AI-focused thematic funds bet on key innovation events, AI breakthroughs, regulatory milestones, or surprise earnings. They aim to anticipate how these signals will reshape the AI sector and adjust their portfolios early. For example, when NVIDIA crushed expectations in Q2 2023, citing unprecedented demand for AI chips, Global XAIQ and similar funds rallied sharply, some gaining over 15% in a matter of days. Rewarding investors who were positioned before the wave hit. Fund managers thus rewarded investors who took positions before the wave hit. Now we have a few strategies related to thematic funds, but this is not a complete playbook, just a look at some of the most common strategies used by thematic funds. We've also put together a broader breakdown of thematic strategies. You can stop the video and take a closer look. Let me introduce you to someone who has mastered the strategies of modern thematic funds from another perspective. In 2025, few names shaped thematic investing like Bill Ackman. His Pershing Square Select ETF launched in January and raised over $500 million in 2 weeks. By May, it crossed $1.4 billion AUM, driven by bold bets on Alphabet, Universal Music, and Canadian Pacific. He called it making conviction accessible, giving everyday investors a piece of a $10 billion strategy. At the same time, thematic funds took center stage. Meanwhile, in the U.S., Fidelity's Next Tech Leaders ETF, a quiet 2023 launch, soared in 2024. Backed by AI giants and NVIDIA's rally, It reached 2.7 billion AUM. Its largest position? TSMC, up 80% YTD. Tech-themed ETFs now claim 19% of global ETF inflows. This is a big pie, and there's enough for everyone. And to those who believe that gold was out of style, reconsider. The SPDR Gold Shares ETF added $5.2 billion in new holdings in Q1 2025 as concerns about inflation and currency devaluation returned. The Clean Gold ETF's success, which mixes exposure to gold with ESG compliance, was more unexpected though. In less than 6 months, the fund grew to $1 billion, which is uncommon for specialized thematic products. These are just some of the heavyweights driving thematic finance forward in 2025. The question isn't whether these themes will perform, it's who will lead them. Here are some of the thematic fund managers I follow. John Meyer, Global X Manager, Kathy Wood, ARC Innovation Manager, Christian Magoon, CEO of Amplify ETFs, and most recently Kevin O'Leary, created funds like the Global Internet Giants ETF and managed several $100 million. Before we continue to the third component, I need to point out something critical that most people completely miss. When the promise of long-term themes meets real investor behavior, it creates unexpected outcomes, poor timing, emotional exits, and overconfidence in a single idea. This is exactly why simply following a popular theme without structure often fails. Component 3, the hidden risks of thematic funds. Thematic funds provide access to innovative concepts such as biotech, green energy, and artificial intelligence. However, many investors fail to consider the risks that lay behind the innovation. Concentration risk. A small number of businesses associated with a single theme are frequently the focus of thematic funds. The fund as a whole suffers if that niche stumbles. Market timing risk. Themes tend to gain traction after early gains. Retail investors often enter too late. Think of 3D printing in 2014 or cannabis in 2018. Liquidity risk. Some themes involve thinly traded companies. That makes it harder to buy or sell during volatility, increasing costs and risk. Volatility and emotional decision-making. Thematic funds can swing sharply. Without a long-term thesis, investors often overreact, buying hype and selling fear. Regulatory and technological uncertainty. Themes like AI or genomics move fast, but so do the laws that govern them. A single regulatory change can derail an entire strategy. Finally, there is the fourth component that ties everything together, the guides and practical information. So how do you choose the right thematic fund? Clarity of theme. Is it specific, targeted? Does the fund focus on AI infrastructure, for example, or just loosely follow buzzwords? Thematic purity. How much of the portfolio is truly aligned with the theme? Some funds are only 40% exposed. Look for high purity, 70 to 90% or more. Manager track record. Has the fund manager handled thematic strategies before? What's their rebalancing style? High conviction or reactive? Fee structure. Thematic funds typically charge 0.5% to 0.75%. That's okay if the fund delivers precision and strategy in return. Transparency. The best funds disclose holdings, explain changes, and evolve with the trend. You should know what you own and why. In short, thematic investing is powerful, but only when combined with discipline, due diligence, and the right structure. Don't just follow the story, invest with clarity and conviction. Please remember to like, comment, and subscribe. Let me know what you liked, what didn't, and what you'd like to see next. Thanks for watching. See you in the next one.